Another bad day and poor day of trade for Indian markets. Why are we down? Well, you could blame it on FI selling. You can talk about money moving out because of global dollar strength, poor earnings or rich valuations. I would say it's an amalgamation of everything which has come together in terms of what is causing this ripple. So it's easy to identify the first W, which is why. Where are we headed? I would term this as a cyclical correction. Best of the bull markets, they correct and they go through these lean patches. When markets, they tend to lose some fat before they muscle up again. In last 4 years, even though we are amidst a raging bull market, we've seen an ugly correction first because of the Ukraine-Russia war, and then when Fed had started increasing rates. So markets are not new to this kind of a correction. It's just that when the correction comes, it hits you so hard, it tends to impact your market psychology. So I'm very confident that the earnings cycle is not over. Selectively, this market has started looking attractive. And if one really looks at the market from the measure of what has affected the market first, election news, bulk of the election news is over, whether it is local or global. Second, IPOs, deluge of IPOs starting from Swiggy to Hyundai to Avari. No large IPOs are planned in the near term, so that in a sense will not have impact on market liquidity. And third and the most important, which is the reality, which is earnings, that's slowing down. But after the recent leg of decline, one would say that the market will start differentiating between men and the boys, and you will see a reasonable amount of comeback in companies where the delivery and the growth has been there. Now the important point, what you should do. Well, if you're in for momentum, well, I'm afraid that in the near term, the momentum looks challenging. The mood and the commitment levels have reversed. If you're in for long haul, remember one line, that more money is made in market by spending time in the market. We are still in a bull market, and I don't think the best of the bull market is yet to come, which means you should stay invested. If you have a SIP, don't cancel it. See, you will see a shakeout, and I think that shakeout has already started happening. I'm working with an assumption that in the second half of this year, growth will come back, festival dispatch numbers are up, and the government spending will come back. If one really looks at the combination of factors which are at play, the second half will be better than the first half, and I expect select cyclicals, few banks, especially the large PSU banks, they will make a comeback. Real estate is looking strong. CDMO companies are looking okay. Auto numbers have been decent. So net this market in a sense will give you options where you should be a buyer rather than a seller. It's too late to panic. While you can argue back and say whether it's too late to buy or not. If you're a long-term investor, don't sell. But if you are in for short-term, today, tomorrow, aaj, kal or parso, then you'll have to deal with the heat in the market. And I always say this, in market, things will go up and down. And if you cannot face the heat, you should not be in the kitchen. And this is market for you where we'll test your temperament, but the winners are the ones who control the emotions, which is control your fear and start buying, because now it's time to get greedy.